Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. All right, welcome back to the program. My guest is joining me right now. He's Olufemi Michael Olarinde. He's the head Fiscal and Tax Reform Implementation Division at the Federal Inland Revenue Service, FIRS. If that bill passes, it will now be the Nigeria Revenue Service. Hello, Mr. Olarinde, and welcome to the program.
Good day, and thank you for having me.
Thank you for coming. Now, let's get started. Where should I start from now? Because these bills, so many controversies, you know, whether conspiracies meets concerns, valid or whatever it is. I think we should start by, understanding what those bills are. So what are the key things to know about these bills? For our viewers right now, what should they know about those bills? So like an introduction. Let me give you 2 minutes to introduce what those bills are. Yeah.
Okay, thank you very much. I will actually not say so many controversies.
Controversies, though. When governors say things, you know there is a big problem for them.
So we're going to get there. Actually, it's only one thing I have heard the governor says. But let's start. What is this bill all about? You know, for a very long time, we've not had a reform in Nigeria, especially tax reform. And this is a good attempt to have a tax reform in Nigeria. Nigeria has been ranked over time. The last ranking was 2018 on ease of doing business. Nigeria was ranked about 130, and out of 190 countries. And so what can we do? We need to reform our tax system. And when you talk about ease of paying taxes, also was a bit, we had some issues in that area. And what the president said, let's reform our tax system while setting up the Presidential Fiscal Policy and Tax Reforms Committee. And the committee has gone ahead to work for over a year now. And what does this reforms entails? It's a comprehensive redrafting of our tax laws and related legislation. So it's a transformative journey in our tax system. Over time, people have complained about multiplicity of taxes. They've complained about ease of paying taxes. They've complained about the mode of paying taxes. They've complained about even how they pay the taxes. So what are we doing about them? You see a lot of, someone wants to start business today, he cannot, there's no certainty about what tax you're going to pay. So we've had all this problem over time across Nigeria, and I'm not saying at one level of government, this is across Nigeria. And what do the issue has been that Nigeria operates fiscal federalism, and so the three levels of government are allowed to administer taxes. So, but there should be a form of coordination, and that's what the president said. Why don't you make this thing easy as possible so that it will be also simple to comply and give clarity, coherence, and effectiveness of our tax law. And so this is simply what these bills are meant to do. And what were the principles of this bill? What are the principles? Simplicity, harmonization, and consolidation of tax laws. We are looking at neutrality of tax of business profits. If you're being taxed, if you do business and you make profit, how neutral, how easy? What is the consideration in taxing? We are looking at promoting competitiveness of Nigerian economy. You know, we need to also work in standard with global practices. We are looking at tax certainty, knowing what to pay. It's also talk about taxpayer focus. The bill is actually focused on taxpayer and not just focused on government making revenue. It's focused on taxpayer and also modernizing. Gone at the era of brick and mortar. These days, everything is done it's digitalized. So why can't we collect taxes or administer taxes in a digital way? Also, there's been taxation, businesses are also done digitalized. So how do we also capture the taxes and from these digital businesses? efficiency of compliance. We are also looking at that. Data-driven policies. So you don't just say, oh, Nigeria, I think this sector makes so much money, so let us tax it. No, we've gone ahead of that day. And this bill is saying we need data. We need data to tax, and we are not just going to assume. So there's something I heard that says, in God we trust. Every other person must bring data. So it means we trust your data to make your argument. So you have to bring data. So these are some of the principles of this reform. Also, we want to achieve economic objective of government. Government say we want to tax the fruits and not the seed. We want to tax prosperity and not poverty. And to that extent, this bill also gives a lot of tax waivers to those considered to be low-income earner or small businesses or emerging businesses, so that they can actually emerge, become big, and government can tax them. So these are the basic principles of those bills. And how many bills do we have here? We have 4 bills.
4. The
first one is talking about the Nigerian tax law. The Nigerian tax law is a bill for the harmonization of all tax laws, as in the laws we use for assessment of, so the different taxes we have. So we said, let's bring all the laws together. Now, also we have the second one, which is called Nigerian Tax Administration Bill. That is just a single bill that unify administrative processes across all tax type. Before now, you see provisions for filing of returns in different tax type. You see companies income tax, different provision, personal income tax, different provision, and now we bring all of them together in one bill to make it easy. Also, all the tax authorities across board can we use that same law to administer taxes. We have the next one, which is the Nigeria Revenue Service Establishment Act. So this is just an establishment act for the FRS. And why are we changing from FRS to NRS? Now the FRS, by the name, federal, simply looks like a federal government agency that serves the federal government. However, FRS collects taxes on behalf of the federation and not the federal government. The taxes we collect is for both the local government, state, and federal government. So it brings a kind of, the state looks at it as, oh, FRS, most of the time. However, the money FRS collects is brought to the table and shared across board. Okay. Why the states still have their own revenue authority. So also, internationally, you know, FRS is called Federal Inland Revenue Service. It looks as if you are restricted to the inland taxes. However, in recent time, it has been confirmed that even a lot of our taxes, a high percentage of it, are sourced from non-offshore. And so, an FRS is the one that collects tax from non-residents. So, which means, why must it be FRS? So, it's just a changing of nomenclature, change of name to suit the work FRS does. So that's the basically reason of NRS. Then we have what we call the Joint Revenue Board. The Joint Revenue Board is what we know as the Joint Tax Board right now. And of course, most states, so it's like an association of the federal and the states. So they're giving them more power to be able to regulate of a sort. So, and most of them are revenue agencies, not just limited to tax agencies. And what we are also looking at is there are other laws that are now situated under the Joint Revenue Board. Some of them were situated under the FRS Establishment Act before, like the Tax Appeal Tribunal law. Now it's under that law. We also have a new one which they call the Tax Ombuds. The Tax Ombuds is just to provide a place where taxpayers can run to when they feel that the tax authorities have not treated them fairly. So not for administrative purposes.
Because
not,
there's a tax appeal, there's a tax...
so it's not for
Trevor.
trial, it's not for issues of tax issues, but administrative purposes. So it's a quick place. You don't need somebody
to settle stuff.
to settle stuff. I have applied for tax clearance certificate to a tax authority, and they didn't respond. I can go to the tax ombuds, who can easily speak to the tax authority. Why have you not done this? So simple administrative issues is just what they want to address. So it's not a big office. It's just to have somebody to run to. So basically, the 4 bills, that is what they are talking about.
Okay, you've exceeded your 2 minutes that I gave it to you.
Apologies.
to introduce.
Apologies for that.
No, but it's okay because I'm going to compartmentalize all those bills. But I think we should just talk about the elephant in the room. Let's just go straight to it because the northern governors are against these bills. Of course, we saw the economic NEC, National Economic Council, rejecting it, says that it should be withdrawn. But the president says, no, let it go. Let it go ahead. Anybody that has an issue, they go for public hearings and all of that. So the elephant in the room is this bill anti-North? Because they're saying it's anti-North. And I would want you to be categorical with me and my viewers as to, let's break this thing down. On the area of VAT, we know that all the northern states, of course, their products they don't consume, as it were. They have Hisbah, they have all this Islamic stuff. Yet the Southerners consume it, and everybody shares from the same thing. But they come over and say, no, don't take alcohol, don't do this, don't do that. So you see, a lot of people have different sentiments to it. So I'd like you to address if that bill is really anti-North.
Okay.
I know it's a difficult one, but
when you say it's a difficult one, it's because if there's no answer to it,
okay,
there is answer to it. And I will tell you, the bill is not anti-anybody. Actually, the bill is a progressive bill. It's a progressive bill. When I say it's a progressive bill, it simply means that it's a bill that considers every part of this country. So the first thing, I have spoken about the vision of the president talking about, I want to tax fruits, not the seed. So if you look at the bill first, it considers that Nigerians have different levels of tax citizens, those who are still struggling, and so it grants some forms of exemptions, some form of reprieve for those people that you do not pay tax at a certain level. As an individual, we're looking at 800,000, you still don't pay. So at a business, it's moving from 25 million threshold we have now to 100 million. And why am I going this way, trying to address the issue of VAT? So for VAT too, if you are a business that your threshold is about 100 million, you are not to charge VAT. But let me go into the VAT issue. VAT now is a consumption tax. So it means that the man who actually consumes the product is to pay the VAT. So looking at Nigeria, and now this bill, what it's saying is that we have a lot of products that we consume. We know some products are produced at a particular place, they are consumed more at a particular area, or also consumed across Nigeria. Now let's talk about VAT. There's a lot of exemptions for basic items, basic food. So now basic food before now is exempted.
Yeah,
but now it's zero rated.
Yeah.
Now it's zero rated. So there's difference between exemption and zero rate.
What's the difference?
Okay. So the difference is that if you buy, let's say, for example, a bottled water.
Okay.
A bottled water is exempt. Let's say it's exempt from VAT. If you buy a bottle of bottled water, you won't see VAT on your invoice. However, in the cost of producing that, the plastic bottle that you use, the cost of making that plastic bottle, the manufacturer will incur VAT. The labeling, you incur VAT. There's a consultancy fee probably for maybe person that designed, there's a design fee.
All that will incur
all
VAT.
those inputs
Yeah.
we incur VAT. So what happens to that bottled water? What happens to it at the end of the day?
It will be more expensive.
The VAT is put on the cost, added to the cost, and charged as the price of the product. You buy it saying, I did not pay VAT, where in actual sense, you have paid VAT.
Okay, so what you're saying
because it
now,
has increased the cost. But
yes.
now, it is zero rate. Now, the manufacturer have the right to claim all the VAT he has paid on that bottled water. So what does it do? It reduces the price for Nigerians. So Nigerians do not pay VAT truly on that water. That is what zero rated means, because for every VAT, you know, the way VAT works is that we have what we call input VAT and output.
Yeah.
So if you're buying, you pay input. If you resell that product, you collect output and you deduct your input from your output and pay the balance. That's how VAT works. So why is because the final consumer should be the one to bear the burden of VAT. So let's now come back to the the story we are. Why I'm setting this background is for us to first understand, because that's where the complexity is. Now we have what they call the headquarter effect. So the issue here now, presently, most VAT collected in Nigeria are collected from a particular point. A particular point, which we all know that most VAT may be collected from Lagos. And why? Because of what we call the headquarter effect. Now, the headquarter effect, let's say a bank, for example. All the VAT paid by a bank will actually be paid from Lagos. But in actual sense, the banking services were actually not consumed in Lagos only. So at the end of the day, what do we need to do to now be able to know where these banking services is done? In the past, we asked the banks and the companies that have branches to report where this were done. But we know in actual sense, there may be no proper reporting.
Yeah, Mr. Olarinde, I understand all
so
what you're saying.
So we're going to fiscalization right now.
Just address the issue that I asked, because it's good we are printing all this background.
I am trying to, I want to address it.
You are taking a long time, because I'm looking at my time and I have other questions.
Okay, now.
Yes.
Now, the issue is that it is not targeted at North,
the North,
because it's also confirmed that most of these products are also consumed in the North. So irrespective of the formula that is going to be shared, it's going to be shared to the North accordingly, especially because we can determine how much is consumed from there. And every part of this country. So there's no problem with that. And another thing is that we need to first, I think there's a miscommunication. Many people have not read this bill, but there's so many communication around it. And I think we need, that's why that's what the president said.
More education.
Yeah,
how many people would take close to 200 pages?
Actually, that's why I'm here today, so that we could actually put some context to this issue. So what we are saying is that the bill is very progressive. If we read this bill very well, so that it won't be that we are the one saying it. This bill is very progressive. The VAT now that's collected from everywhere, it will return to that place.
What percentage are we going to be seeing now? Because earlier on, of course, VAT is shared 15% to the FG, 50 to state, 30 to local government.
So what the bill is proposing is proposing, in fact, the bill is even reducing the one from the federal government and increasing for the states. So it's saying 10% to the federal government, 55% to the state, and 35% to the local government. That's what the bill is saying. So which means the state gets more now. So irrespective of where you come from in Nigeria, you're still going to get more. And with automation and everything we are doing, FIS is deploying e-invoicing presently that even will help to capture more of this VAT, and which means there will be more revenue for even everyone to share.
Okay, let's talk. I said earlier on, let's compartmentalize it. So let's use the
Okay.
few minutes we have to take a look at it. The bill is also proposing an increase in VAT from about 7.5% to 10% next year, 12.5% in 2026, and I think 15%, 2026 to 2029, then 15% to 2030. I would like you to take a look at that. You've talked about VAT exclusions in a way. In terms of food, we'll be seeing baby product, hardwares, and arms, and what have you. If you have any other thing to say around the VAT exclusions, you may add it. The other interesting part of it is the CIT component, which has decreased company income tax, if I'm not mistaken, because I also read,
Yes.
I didn't fully read the whole thing.
No problem.
You know, I read, you know, a few parts of it, but CIT, of course, those key areas, CIT 27.5% from the 30% it is right now. Then small firms. I saw small firms, so I really want to know what categorizes small firms, because, you know, in previous years, we've had what we call the Finance Act,
Yeah.
whereby 25 million will not pay, yes, and all of that. So I would like you to talk about that. If you can, in like 2 minutes, then I'll add other questions.
Okay, let me be very fast. So let's start with the categorization of companies. Right now, we have small companies. It's 25 million right. It's 25 million right now. So it's moving to 50 million.
So for those of us that are within 25 million, what will we do?
No. If you are 25 million,
Okay,
you don't pay tax.
Okay, so it's moving to 50.
Yeah, it's
okay, so it's not
making higher
25
because
again.
the government understands that.
Okay.
So it's moving to 50 million.
You don't pay what now?
You don't pay companies income tax.
Okay.
You also don't have the obligation to collect VAT.
VAT.
So if you stay, everybody who is buying from you is within your area, they don't pay such VAT. They don't. So in other words,
that's
they are
50
excluded.
million naira.
Yeah, 50 million naira. Sorry, I hope I didn't mention any other figure earlier.
No.
It's 50 million.
No.
So also, we are not saying that, okay, for such, you are going to be exempt from company's income tax. Now, if you are now large tax company, which is above that, large company, which is above that 50 million, you will now be paying what we call 27.5%. That is reducing from 30% to 27.5%. Now, the essence is to stimulate business, to ensure business grow, to reduce the burden of tax on businesses. Grow before you can tax them. And we're also looking at, that's in 2025, reduced by 27.5. Then 2026 will go to 25%. So that is what that is saying. And when you flip that to VAT, also for VAT, if you are within this 50 million down, you don't collect. So I used to say an example, you live in a locality where all the businesses around there are 50 million. The burden of VAT will be reduced on those who patronize within that locality. So let's flip it to the issue of increase, which I've tried to explain before, the input and output system. Now, because of the new system we are coming with, we used to practice what we have the restrictive input-output mechanism before. So like your business now, you render services. So when you render a service, you pay input VAT when you are probably, you are constructing the studio, you're buying the cameras, you are doing all these things. You pay VAT. But when you now produce advertisement or you produce content, you collect output VAT, you cannot claim your input VAT. That is restrictive VAT model. But the system we are now going to now, we allow you to claim all VAT incurred, no matter what. So what it means is that at the end of the day, you have bought things and it has amounted to 1 million and about 1 million VAT. Then you sell your product, you collect about 1.2 million VAT. And it's at, it's at 7.5. Imagine the margin. You take away all you have taken and you are, so it will erode the VAT so much and people will be collecting a refund. So that's why government is saying, let's add a little so that there can be something to take away.
You know,
and all the zero-rated issue I explained to you,
earlier.
Imagine that all those people are coming for refund. They are coming for refund of what they have incurred on that water. See the analysis I did about government is not going to get anything on that water, but every cost, every input VAT that manufacturers are incurred, is taking it back.
Okay, you know what I'm thinking? The government seems to be doing good in terms of, okay, reducing company income tax from 30% to 27.5%, eventually 25% in 2026, increasing VAT on one end. And however, FG, federal government, will be getting less of the VAT component. But something must give, because I'm looking at your company income tax has been reduced. That means that there will be less revenue to even government, as it were.
In the short run.
Yes. Okay, in the
Go
short
on.
run, explain that.
Why? Because we expect that compliance will improve, and the base will be widened.
Okay, and the base will be widened.
The base will be widened, and people will have no reason
not to pay taxes.
Not to pay again. And when governments start coming up with enforcement, at least you have a reason that, we've done things that are easy for people to do. And like I said, we are also automating all the systems. This bill is also doing that so that we can close all the loopholes, all the gaps that make people to evade, making it simple for people to comply.
Okay.
So basically, that's the government is saying, let's not burden businesses. Let's make them grow.
Okay, is the government and perhaps even FIRS, because you are in the FIRS, and I would like to ask this question around what you mentioned earlier, that the president had said, we don't want to tax fruit, we don't want to tax seeds, let's tax fruit. Are you people aware now that even the seeds are threatened? We don't even have seeds now to plant, because the business environment now is so tough and harsh. Companies are closing down and all of that. I guess that by the end of the year, when we see what you guys come up with in terms of collection, we will see and we'll be able to analyze that. But if you can give me a brief overview of that. Then to add to that question, you mentioned, of course, that one of the components of the tax bills will be to change FIRS to a Nigeria Revenue Service. How will that affect other IRS, Internal Revenue Services, in the states too?
Okay,
yes, because we have to go.
Okay, taxing the seed, taxing the fruit rather than the seed.
We are not having fruits now.
No, you can't say there's no fruits.
I know, the fruits no plenty now.
When you say you know plenty,
no, you're not even there now.
Government understand the fact, say the fruit no plenty.
Companies are shutting down.
Government understand the fact that the fruit no plenty. That's why it's reducing the taxes. So I'm sure it's fair enough that government understand that these fruits are even threatened. So let me reduce. The fruit or the seed.
The seed is threatened. There's no. So the soil is not good.
So government said,
soil is not coming out well.
Government said, let me reduce my take.
I don't have water to water the seed.
That's why government is saying grow first before we tax you. So, and again, don't forget that minimum tax have been removed from the law. What it means is that if you don't make profit, nobody tax you.
Okay. So the question around revenue service, we have to go in terms of how
revenue service, everything stays the way it is. It's only FIS that is changing their name. Every state, the fiscal, we still have our fiscal federalism, so nobody can.
And the states also change their names if they want to.
It's just Christianing. You can change your name when you want.
When you want.
But of course, in your change, there will be a philosophy to it. Our names have different philosophies that they come with. So if I say, oh, I collect for the federation, I should be able to answer the name Nigeria. Nigeria. So it's simple.
Okay. Of course, the states will not answer Nigeria.
They can't answer Nigeria. They all answer the names of their states right now.
Okay. I think we'll still look at this because the bills, of course, are before the National Assembly. And the FIRS, if you are watching, I know you all are watching, and you see, there needs to be more public education around this. So we expect that we'll have more of this. Thank you very much for coming.
Thank you, Nancy. It's a pleasure to be here.
All right, you're welcome. All right, that's it on today's edition of the program. I've been speaking with Mr. Olufemi Michael Olarinde, who is the head Fiscal and Tax Reforms Implementation Division at the FIRS, and we've been looking at the tax reforms bills of Mr. President. Thank you all for your company today. Please join me again tomorrow for the final edition of the week. I am Nancy Naji. Be the best you can be and be that change that you want to see. Bye now. Thank you for watching. In case this is your first time watching us, thank you. Don't subscribe to the channel, drop your comment as well as like, and most of all, share our content. Bye.